Elsewhere, the government appears to have taken a more cautious approach in the proposed Finance Bill 2026, avoiding the sweeping tax increments that triggered nationwide protest in June 2024, while warning that the proposals could still increase the cost of living. Tax experts cited a shift in strategy towards enforcement and compliance mechanisms, broadening tax base as well as sector-specific adjustments.
Smarting from the anti-finance bill protest that shook the country in June 2024, the government appears to have changed tact.
Do some cleanups here and there, do some reclassifications of items, but strictly when it comes to introduction of new taxes or even increments, they are really kept at a minimum. At a bare minimum.
Tax service experts say areas that will bear the Finance Bill 2026 burden include banks, digital economy, cryptocurrency, gambling firms, informal financing models, and import businesses. The Kenya Revenue Authority could surmount the legal hurdle in tightening tax collection from foreign digital platforms operating in Kenya through local partners.
There has always been that aspect that you really can't enforce this. These are companies or entities outside Kenya, and the best way to do it is try and see who is it within Kenya who is dealing with them often. So if they don't want to account for the digital taxes, let the person whom they are dealing with here locally be the one to account for those taxes.
Cryptocurrency transactions are also targeted in efforts to improve compliance in the rapidly growing digital finance sector. The introduction of VAT on various credit purchase models, such as the Lipa Pole Pole model, except for higher purchase, could hurt both the ordinary Kenyan and service providers.
So what this bill is trying to do is it will now force these suppliers to either comply in terms of getting licenses under the Hire Purchase Act. Either you as the platform owner, M-Kopa is more of just the platform. The same is happening with all these Lipa Pole Pole, Lipa Mdogo for the phones and all that. So either they are the ones who will be forced to comply, or for those retailers like now supermarkets who have also decided to roll out such products, they will now be forced to comply.
The ambiguity in the clause on VAT on money transfers shrouds application of tax on either M-Pesa transfers or software and digital platforms.
Yes, we know M-Pesa is more of a mobile money transfer, through cellular networks and all that. So there's that question of, is it really true that what M-Pesa is doing is not a software or, a platform? Yeah. So those are some of the things that maybe during the public participation it will come out, so that it's very clear that they are not targeting M-Pesa. Yeah, adding VAT on M-Pesa.
The moving of items from zero-rated to exempt does not augur well with suppliers who may be tempted to transfer the unrecoverable VAT cost to consumers.
But the moment you take it to exempt, it means there's no way that a supplier will be able to recover the inputs. So what will the supplier do? The supplier will definitely add this onto their prices. So even though they won't charge 16% VAT, but they'll just add them to the prices.
Stakeholders hope legislators will keenly look at the proposals on the bill after its tabling next week before it comes into effect on July 1st. Kamchemenza for Prime Edition.